Ever stared at a stock chart and thought, wow, this looks like my Wi-Fi password, random, confusing, and probably important? What if I told you that behind all those squiggly lines and fancy terms, the stock market is basically just a glorified flea market? If the stock market has always sounded like a secret club where people in suits yell things like bearish and bullish, which, side note, sounds like a bad dating app for animals, don't worry, you're not alone. Today, we're demystifying stocks for beginners. No jargon, no judgment. We'll cover everything from, wait, so I can own a slice of Disney and call myself a part-time Mickey, to how do I buy stocks without accidentally selling my soul? And yes, we'll even tackle the real question on everyone's mind. Can I do this in my pajamas while binge watching Netflix? Spoiler, absolutely. So grab your favorite snack and let's turn confusion into confidence, one stock at a time. The stock market is just the place where these pieces of ownership are bought and sold. Think of it like a giant auction house, but instead of paintings or antiques, they're trading shares of companies. Now, the price of these shares goes up and down, and that's where the excitement and sometimes the anxiety comes in. So why would a company sell pieces of itself in the first place? Well, it's often to raise money. Maybe they want to expand, develop new products, or even just pay off some debt. Selling stock is one way to get that cash. And for us as investors, it's a way to potentially grow our money over time. So let's get into the basics. What exactly are stocks? We've touched on this, but let's dig a little deeper. Stocks are also called shares or equity. When you own a share of stock, you have a claim on a portion of the company's assets and earnings. There are a couple of main types of stock you'll hear about. Common stock. This is the most common type. If you own common stock, you typically get to vote on important company decisions, like electing the board of directors. You also get a share of the profits, if there are any, in the form of dividends. Preferred stock is a bit different. Preferred stockholders usually don't get voting rights, but they do get paid dividends before common stockholders. Think of it as having a bit more security, but less say in how the company is run. Now that we have a clearer picture of what stocks are, let's talk about what the stock market actually is. Okay, so we know it's where stocks are bought and sold, but it's not a physical place like a farmer's market. These days, it's mostly electronic. There are major stock exchanges like the New York Stock Exchange, NYSE, and the NASDAQ. These are like the central hubs where buyers and sellers come together, but you don't actually go to the New York Stock Exchange to buy stock. You do it through a broker. We'll get to that in a bit. Speaking of buying, where exactly do you buy stocks? This is where brokers come in. A broker acts as the middleman between you and the stock market. They handle the actual transactions. Back in the day, you'd call a broker on the phone and tell them what you wanted to buy or sell. These days, it's all done online. There are tons of online brokers out there offering different services and fee structures. Some popular ones include Webull, Fidelity, Schwab, Robinhood, Moomoo. Yep, I said moo like the cow. It's crucial to do your research and choose a reputable broker that fits your needs. Consider factors like fees, minimum investment amounts, and the tools and resources they offer. All right, so you buy stocks through a broker. But how do you actually make money from stocks? There are two main ways to make money in the stock market. Capital appreciation. This is when you buy a stock at a lower price and sell it later at a higher price. The difference is your profit. For example, if you buy a stock for $50 and sell it for $75, you've made a $25 profit per share. Dividends. Some companies pay out a portion of their profits to shareholders in the form of dividends. This is like getting a regular paycheck just for owning the stock. Not all companies pay dividends, though. It's more common with established, profitable companies. Now that we know the basics of making money, let's explore some of the different stock market strategies you might encounter. This is where it gets interesting. There are tons of different ways to approach the stock market, and what works for one person might not work for another. Here are a few common strategies. Long-term investing. This involves buying stocks and holding them for a long period, like years or even decades. The idea is to ride out the ups and downs of the market and benefit from the overall growth of the economy. This is often considered a good strategy for beginners. Value investing. This strategy focuses on finding stocks that are undervalued by the market. Value investors look for companies that are trading at a discount to their intrinsic value, meaning they believe the stock is worth more than its current price. Growth investing. Growth investors, on the other hand, look for companies that are expected to grow rapidly in the future. These companies may not be profitable yet, but they have the potential for significant growth. Day trading. This is a very active strategy that involves buying and selling stocks within the same day, hoping to profit from small price fluctuations. Day trading is very risky and not recommended for beginners. It's important to remember that there's no one-size-fits-all strategy. The best approach for you will depend on your individual goals, risk tolerance, and time horizon. So, where can you go to learn more about stocks and investing? Education is key. There are tons of resources available to help you learn about the stock market. Here are a few. Books. There are countless books on investing, ranging from beginner-friendly guides to more advanced texts. Websites and online courses. Many websites and online platforms offer educational resources, articles, and courses on investing. Financial news outlets. Staying up to date on financial news is important. Follow reputable sources like the Wall Street Journal, Bloomberg, and Reuters. Investment newsletters. Some newsletters provide in-depth analysis and investment recommendations. Now let's talk about something really important. How are your gains taxed? Okay, this is important. When you make money from stocks, you'll likely have to pay taxes on those gains. In many places, there are two main types of taxes that apply: capital gains taxes. These taxes apply to the profits you make when you sell a stock for more than you bought it for. The tax rate can vary depending on how long you held the stock. Generally, if you hold it for a year or less, it's taxed at your ordinary income tax rate. If you hold it for longer than a year, it's taxed at a lower capital gains rate. Dividend taxes. Dividends are also taxable. The tax rate can vary depending on your income and the type of dividend. It's crucial to understand the tax implications of your investments. Consider consulting with a tax professional for personalized advice. You might be wondering, how long does it take to know everything about the stock market? Here's the honest truth. You'll never know everything about the stock market. It's constantly evolving, and there's always something new to learn. But don't let that discourage you. You can definitely gain a solid understanding of the basics and become a successful investor over time. It's a journey, not a destination. A very common question is, how much money should you put in during your first year of investing? This is a really common question, and the answer is, it depends. There's no magic number. But here are a few things to consider. Start small, especially when you're just starting out. It's often best to start with a small amount of money that you're comfortable losing. The stock market can be volatile, and you don't want to risk your life savings. Don't invest money. You never invest money that you'll need for essential expenses like rent, food, or bills. The stock market is for long-term investing, and you don't want to be forced to sell your investments at a loss if you need the money. Consider your risk tolerance. How comfortable are you with the possibility of losing money? If you're very risk averse, you might want to start with a smaller amount and gradually increase your investments as you gain more experience and confidence. The key takeaway here is that there's no amount of money that's too small to get started. The important thing is to start learning and gain experience. Now, for a question, some of you might be thinking, if you're lazy, can you still make money from stocks? Okay, let's be real. Investing requires some effort. You can't just throw money at the market and expect to get rich quick. However, some strategies require less active management than others. For example, long-term investing using index funds can be a relatively passive approach. Index funds are baskets of stocks that track a specific market index, like the S&P 500. They're a good way to diversify your investments and don't require a lot of active trading. So while you can't be completely lazy, you can choose strategies that align with your level of engagement. On a related note, is it even worth investing small amounts of money? Absolutely. In fact, it's often better to start with smaller amounts. Here's why. Learning experience. Investing with small amounts allows you to learn the ropes without risking a lot of money. You'll experience the ups and downs of the market, learn how to manage your emotions, and develop your investment skills. Compounding. Even small amounts of money can grow significantly over time thanks to the power of compounding. Compounding is when your earnings generate their own earnings. It's like earning interest on your interest. The earlier you start, the more time your money has to compound. Avoid big mistakes. When you're new to investing, you're more likely to make mistakes. Starting with smaller amounts limits the potential damage from those mistakes. It's much better to, in those early years, those first, 1 to 3 years in the stock market, to be playing around with smaller amounts of money rather than, I saved $50,000 and my life savings $50,000. I'm dumping all in the stock market. That's a much more dangerous game, guys. Here's how to stop your future self from face palming at your bank statement. Finance Fiascos Volume 1 Raw Confessions plus Mind Map PDFs for bite-sized quick review of these videos. Use code CLUE10 for 10% off today only. Especially when you're going right off the bat like that, so there's no amount of money that's too small. The name of the game is just to get started. Okay, so we've covered a lot of ground, but one of the biggest challenges for beginners is overcoming fear and inertia. It's easy to get overwhelmed by the sheer amount of information, the potential for losses, and the feeling that you don't know enough. This fear can paralyze you and prevent you from ever getting started. And that's a huge problem because time is your greatest asset when it comes to investing. So how do you tackle this? Let's explore some strategies for overcoming this fear and taking that first step. So how do you overcome this fear and take that first step? Here are a few strategies. Start with education. We've already talked about this, but it's worth repeating. The more you learn, the more confident you'll become. Focus on understanding the basics and don't try to learn everything at once. Set realistic expectations. Don't expect to get rich quick. Investing is a marathon, not a sprint. Understand that there will be ups and downs and focus on long-term growth. Develop a plan. Before you invest any money, create a plan. Determine your goals, risk tolerance, and time horizon. This will help you stay focused and avoid impulsive decisions. Start small and diversify. As we discussed, start with a small amount of money and diversify your investments. Don't put all your eggs in one basket. Diversification helps reduce risk. Seek guidance. Don't be afraid to seek guidance from experienced investors or financial advisors. They can provide valuable insights and support. Practice with a simulator. Many online brokers offer stock market simulators. These allow you to practice investing with virtual money so you can get a feel for the market without risking any real money. All right, let's bring it all together. The stock market might seem complicated at first, but it doesn't have to be. Remember the basics. Stocks are pieces of ownership in companies. The stock market is where they're traded, and you can make money through capital appreciation and dividends. There are different investment strategies, and education is key to success. Don't be afraid to start small, diversify, and seek guidance. The biggest hurdle is often overcoming fear and taking that first step. But with knowledge, planning, and a long-term perspective, you can navigate the stock market and work towards achieving your financial goals. If you found this video helpful and want to learn more about personal finance, please subscribe to the channel. See you in the next video.